Money is something we use every day. We buy food, pay bills, save for the future, and earn it through work. But have you ever wondered where money came from? Thousands of years ago, people lived without coins, paper bills, or digital payments. The history of money is the story of human civilization itself. It shows how people solved problems, built trust, and created systems that connected the world. Long before money existed, people exchanged goods through a system called barter. If a farmer had extra wheat but needed shoes, he could trade wheat with a shoemaker. A fisherman could exchange fish for vegetables, and a hunter could trade animal skins for tools. Barter worked well in small communities where people knew each other. However, barter had many problems. Imagine you had chickens and wanted bread. If the baker did not need chickens, the trade could not happen. This problem is known as the double coincidence of wants. Both people had to want exactly what the other person offered. As communities grew larger, barter became slower and more difficult. People began looking for something everyone would accept. Different societies started using items with value as early forms of money. In different parts of the world, people used salt, shells, tea, cattle, rice, feathers, and even large stones. These items were valuable because people trusted them and believed others would accept them in trade. As trade expanded, metals became the preferred form of money. Gold, silver, and copper were durable, easy to carry, and could be divided into smaller pieces. Around 600 BC, the kingdom of Lydia, located in modern-day Turkey, created the world's first official coins. These coins had a standard weight and were stamped by the government, making trade much easier. Coins quickly spread across Europe, Asia, and Africa. Ancient Greece used beautiful silver coins, while the Roman Empire produced millions of coins that supported one of the largest economies in history. Coins made long-distance trade faster and helped powerful civilizations grow. Although coins were useful, carrying large amounts of metal was heavy and risky. In China during the Tang and Song dynasties, merchants began using paper receipts instead of carrying bags of coins. Eventually, the government issued official paper money. This was the world's first banknote. Paper money later reached Europe through trade and exploration. At first, many people did not trust paper because it had little value by itself, but governments promised that the paper could be exchanged for gold or silver. Over time, people accepted paper money because they trusted the government behind it. Banks became increasingly important. Instead of hiding gold at home, people deposited it in banks for safety. Banks gave customers written receipts proving how much they owned. These receipts eventually evolved into banknotes and checks, making payments even more convenient. During the 19th and early 20th centuries, many countries followed the gold standard. Under this system, every paper note represented a certain amount of gold stored by the government. This gave people confidence that their money had real value. However, maintaining the gold standard became difficult during wars and economic crises. Governments needed more flexibility to manage their economies. In 1971, the United States officially ended the direct connection between the US dollar and gold. Most modern currencies today are called fiat money. They have value because governments declare them legal tender and people trust the financial system. The invention of computers transformed banking once again. Credit cards allowed people to buy goods without carrying cash. Debit cards made it easy to spend money directly from bank accounts. Automated teller machines, or ATMs, gave people access to cash anytime they needed it. The internet created another revolution. Online banking allowed customers to transfer money instantly from their homes. Digital payment services made shopping faster and more convenient. Today, millions of people pay with smartphones, smartwatches, and online wallets without touching physical cash. In 2009, a completely new form of money appeared. An unknown person or group using the name Satoshi Nakamoto introduced Bitcoin, the world's first successful cryptocurrency. Unlike traditional money, Bitcoin is not controlled by any government or central bank. Instead, it operates on a technology called blockchain, a secure digital ledger that records every transaction. Bitcoin inspired thousands of other cryptocurrencies. Some people see them as the future of finance, while others believe they are too risky because their prices change dramatically. Governments around the world continue to study and regulate digital currencies, while also developing their own central bank digital currencies, or CBDCs. Today, money exists in many forms. We use coins, paper bills, credit cards, digital wallets, bank transfers, and cryptocurrencies. Although the form of money has changed dramatically over thousands of years, its main purpose remains the same: to make trade easier, store value, and help people exchange goods and services efficiently. The journey from simple barter to advanced digital currencies is one of humanity's greatest achievements. Every stage of this history reflects innovation, trust, and adaptation. As technology continues to evolve, the future of money may include even faster, safer, and more global ways of making payments. One thing is certain: the story of money is far from over.